This is big news. Moody's has officially upgraded Tesla to an investment grade rating for the first time ever. Tesla's rating is now Baa3 from Ba1. With time, I believe Tesla will go all the way up to AAA. Alexandra has been bugging these agencies for a while, and I believe it was largely due to Alexandra that Tesla just got an upgrade. Thank you, Alexandra. You did great. We'll take a look at the note from Moody's, but really it should read, Tesla Boomer Mama, Alexandra made me do it. We also have some great news from Europe, and we'll go through all of that. This was obviously coming. This is before Tesla got upgraded. And as you can see, all these other companies right here had these great ratings, even though you see a lot of bad colors here. But you look at Tesla and it's dark green. There seems to be an interesting story behind all of this as well. Alexandra talked to a journalist, and it appears that journalist talked to this rating agency. However, the journalist has not published the article yet. Alexandra spoke to him Friday late afternoon, and she suspects that he called the rating agency asking all of the questions. It may have killed his article, but it sure moved the rating agency. They also explain what Tesla needs to do to get a better rating, or what has to happen for Tesla to get a lower rating. But let's see what they say about why they upgraded Tesla in the first place. The Baa3 long-term issuer rating reflects Moody's view that Tesla will maintain its position as one of the leading manufacturers of battery electric vehicles as the company further solidifies its global footprint. Moody's anticipates that Tesla will deliver nearly 1.8 million vehicles in 2023, a 34% increase compared to the 1.3 million vehicles that it delivered in 2022, and nearly double the deliveries in 2021. Considerable investments in new vehicle and battery cell production facilities enable a steep increase in vehicle deliveries. They are pretty much just going with what Tesla is guiding everyone for and what Wall Street expects. Tesla's growing scale, regional production facilities, and heightened focus on the efficiency of its manufacturing process support an EBITDA margin that Moody's expects to be 15.8% in 2023. The margin compression relative to an industry-leading 18.9% EBITDA margin last year reflects a drop in Tesla's vehicle prices amid a more competitive offering of battery electric vehicles by other automakers, changes in tax credits across geographies, and concerns about vehicle affordability. Nothing mentioned about interest rates. That's interesting. Moody's expects Tesla's financial policy to remain prudent. Financial leverage is well below 1 time after Tesla repaid about $10 billion of debt in the last 3 years. Other governance considerations are management's track record, balancing business accomplishments against notable key man risk, and close ties between members of the board and the CEO, which I would view largely overall as a positive, actually, because that means Elon has more control to steer Tesla in the right direction. If you are more of a short-term investor, maybe less than 5 years, you probably don't like that. But if you want Elon to stay involved in Tesla for a long time, I think that is actually a positive. But Moody summarized the general sentiment among the institutional investors pretty well. The stable outlook reflects Moody's expectation that Tesla will continue to capitalize on robust growth in global demand for battery electric vehicles, but in an increasingly competitive environment. Further, Moody's anticipates Tesla will maintain an industry-leading EBITDA margin in the next 12 months, albeit still largely reliant on only 2 models. That should really be a positive, because if Tesla can do so well with just 2 models, think about what will happen when Tesla adds a cheaper vehicle and then a van as well. To me, that signals opportunity, because many people still don't see that that's actually a good thing. They think it's a bad thing. Moody's anticipates that liquidity will remain very good, underpinned by a very sizable and growing balance of cash and investments. Prospects for free cash flow of more than $7 billion and limited debt maturities in the next 2 years. And here, Moody's explains what needs to happen for them to upgrade Tesla again or downgrade Tesla. The rating could be upgraded if Tesla maintains a strong competitive global presence, as automakers offer an increasing number of battery electric models and successfully broadens its product offering such that it reduces its reliance on the earnings contribution of the Model 3 and the Model Y. Tesla's ability to sustain an EBITDA margin in the high single digits and a longer track record of a consistent, prudent financial policy are also important considerations for a higher rating. I think for investors to be skeptical about Tesla's future, you have to have no trust in the management, because you are basically assuming that Tesla will not come out with new and better vehicles, that it will only have to rely on the Model 3 and the Model Y. So that's interesting, but I guess from their point of view, that makes sense because they have probably not much trust in the management. The rating could be downgraded if demand for Tesla models materially softens amid an expanding offering of battery electric vehicles by other automakers, or if Tesla is unable to sustain its EBITDA margin in the mid-single digits. So very specific. I like specificity. A material shift in Tesla's financial policy that signals a greater tolerance for financial risk could also cause a rating downgrade, including if debt EBITDA is greater than 3 times, or if the amount of cash, investments, and committed revolver availability decreases considerably from current levels. They gave pretty specific numbers, but I mean, you look at all of this and it is green already, so that's a bit unfair. I mean, all of these are getting better ratings than what Tesla still has, pretty much. And this is quite an interesting chart. There's a translated version. I think it's translated from Korean. So supposedly this is when the company got their investment grade rating, and then this is what happens 5 years later. That seems quite impressive. Even if you look at 1 year later, wow, this looks pretty good. Although Google 2016, I don't think that's right. Yeah, I'm pretty sure Google got their investment grade rating way before 2016. A reminder to always double check the data that you see on Twitter. But I did see other similar charts before, and the feeling that I got was somewhat similar as well, in terms of the direction of where the companies usually or often go after being upgraded to investment grade. So this is a big deal. We have more bullish data coming from Europe. These are Tesla sales in Europe, but only from countries that report daily, which is about 17% of total sales in Europe. But often, big countries follow whatever is happening in these countries as well. And as you can see, we are breaking out very well. This is from 5 days ago specifically, and Tesla already beat Volkswagen brand, but it was still behind the whole Volkswagen group, which includes many other brands as well. As you can see here, Tesla was a little bit behind, but now Tesla beat the whole Volkswagen group in Europe in these daily reporting countries. Remember, Troy does not expect a record quarter in Europe, but he expects a record quarter in China and the US. And if these numbers continue like this, we might have a record quarter in Europe as well, which would suggest that Tesla is perhaps very likely to beat everyone's expectations. We will see. We will soon have the weekly deliveries from China. The last number was 17,000. So if you can maintain that, and ideally if you can go over that, that would be amazing. While it is certainly possible that Tesla stock will jump tomorrow, if it does, then I don't think it will have much to do with the upgrade from Moody's, because Tesla's bonds have been already pretty much priced at investment grade prices. So I don't think the market will react very strongly to this, but still it is great to have this news. But anything is possible. Last week, the market went from pricing a late cycle inflationary expansion to a deflationary banking crisis requiring significant monetary stimulation in the course of 5 days. So yeah, we'll see. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.